From regulated tokenization platforms to real-time settlement, from Fortune 500 integrations to government-level applications, HBAR is where utility meets inevitability. This is your chance to see it now, before the rest of the world catches on. Stop scrolling. Take 5 seconds right now to subscribe to this channel and share this video with one person who actually does their homework in crypto. Because when this plays out, when Hedera makes its next move, you'll want the receipts. You'll want to be the one who saw it coming, not the one who watched it pass. Let's get into it. Most people misunderstand volume. They think it's the roar of the crowd, meme coin pumps, viral tweets, and wild green candles. They think it's loud, fast, and obvious. But real volume, the kind that precedes real market moves, is silent. It's cold, methodical, and completely invisible to the average trader. It doesn't scream on TradingView. It doesn't need a meme to move. And right now, that silent volume is flowing directly into HBAR. Over the past few weeks, on-chain data has revealed a quiet but unmistakable uptick in strategic wallet activity. We're not talking about random retail buys or speculative pumps. We're talking about coordinated, calculated behaviors across enterprise-class wallets. This includes high-frequency microtransactions, wallets splitting large holdings across multiple addresses, and OTC-sized inflows that don't trigger sudden price jumps. If this were happening in any other asset, people would be screaming accumulation. But with HBAR, there's just silence. Why? Because the institutions playing in this space aren't trying to chase retail attention. They're not trying to flip tokens. They're building infrastructure, and that takes volume before it shows up as price. But what exactly are they building? This isn't just any enterprise play. Hedera is integrated into live production systems across multiple billion-dollar industries. This isn't a future promise, it's happening right now. Avery Dennison, a $12 billion global packaging and RFID company, is running a solution on Hedera that tracks billions of physical items. Every item creates a transaction. These aren't testnet fantasies. These are mainnet transactions being logged in real time. Shinhan Bank, one of Korea's top financial institutions, is leveraging Hedera for cross-border stablecoin transfers and financial document verification. They're not just experimenting, they're solving real-world multi-billion-dollar problems with HBAR. Google Cloud, Boeing, IBM, and ServiceNow aren't just investors. They're governing council members and active integrators. Each one has a direct incentive to build, scale, and utilize the Hedera network for real-world services. With every integration, volume grows, not as a one-off spike, but as perpetual throughput. This is enterprise-grade demand, and most people are missing it. They are obsessed with price, but value is being built in the background, in systems that don't care about memes or trends. But how is Hedera's unique tokenomics preparing for this massive, inevitable demand? HBAR isn't just any token. It was built with enterprise-grade tokenomics from day one. And while that might sound like a buzzword, here's what it actually means. This isn't a memecoin designed to pump and dump. It's a finely tuned asset structured to support global-scale applications and, more importantly, to reward long-term alignment with the network's success. The competitor's analysis was a good starting point, but they didn't fully explain the gravity of what's happening. Think of a glacier. It moves slow, almost imperceptibly. But once the cracks start, everything moves fast. Hedera's supply dynamics are that glacier. The token release schedule is methodical and strategic. This limits sell pressure. But the real magic is in the burn mechanics and staking. Most people assume token emissions will drown the market, but with major entities staking, burning, and accumulating off-exchange, the real supply available to retail is silently shrinking. Hedera's network fees are tiny, but as adoption scales to billions of transactions, those tiny fees add up. And every single transaction burns a small amount of HBAR. The more the network is used, the more tokens are permanently removed from circulation. So what happens when that tipping point hits, where adoption outpaces emission, and the glacier finally cracks? We're in the middle of a fundamental shift in the internet. Web 2 was built on centralized servers, data silos, and middlemen. Web 3 promises decentralization, but most people think that just means crypto. Wrong. What's actually happening is a rebuild of the back end of the global internet, quietly in stages. And it's not happening on flashy meme chains or unstable proof-of-work networks. It's happening through enterprise-aligned, regulatory-friendly infrastructure. Hedera isn't just another blockchain. It's not a blockchain at all. It runs on Hashgraph, a patented consensus mechanism that's faster, fairer, and more energy efficient than anything else in the space. Here's what that means in plain English. Finality in seconds, not minutes. Imagine your bank transaction clearing instantly, not with a pending status. Transaction costs of less than $0.001. A fraction of a penny. Carbon-negative operations by design. It's a green solution that the entire world can get behind. These aren't future promises. This is live right now. This is why governments, supply chains, payments companies, and tokenized assets are choosing Hedera. They don't need speculation. They need speed, predictability, legal clarity, and enterprise security. And Hedera delivers all four. But here's the real kicker. This infrastructure flip is being driven by a board of directors you won't believe. Most crypto projects are run by an anonymous group of developers. They're brilliant, but they're not Google. They're not IBM. They don't have the legal teams, the compliance departments, or the institutional trust required to operate at a global scale. This is the biggest weakness of nearly every other Layer 1 network. Hedera's governing council isn't a club for passive investors. It's a board of directors for the future of the internet, composed of a diverse group of global corporations and organizations. These aren't no-name startups. They're titans of industry that you use every single day. This isn't about decentralization for the sake of it. It's about building a robust, enterprise-grade fortress that is a safe harbor for trillions of dollars in institutional capital. So here's the question that should keep you up at night. If the biggest, most trusted companies in the world are running this network, what does that say about the ultimate purpose of Hedera, and how does it play into the massive trend of real-world asset tokenization? Okay, so we've established that Hedera has the governance and security that traditional institutions demand. But what are they actually doing with it? They're preparing for a tsunami of value that's about to hit the digital world, real-world asset, RWA tokenization. Let me give you an analogy. Imagine a house. It's a huge, valuable asset, but it's hard to sell. You need real estate agents, lawyers, banks. It's a slow, messy, expensive process. Now, imagine putting a unique digital barcode on that house. That barcode is an HBAR-powered token. It represents the value and ownership of the house, and because it's on Hedera, it can be bought, sold, or fractionalized in seconds. This isn't a hypothetical. The Hedera Token Service, HTS, is a built-in killer app for this. It's like having a factory that can mint any kind of digital asset you can imagine, with incredibly low fees and compliance features baked right in. From carbon credits, which is a multi-trillion-dollar market, to fine art, real estate, and financial instruments, Hedera is becoming the trusted infrastructure to bridge the physical world with the digital economy. Companies like Arcax and Red Swan are already building on it. This is why major financial institutions are piling into the Hedera ecosystem. They know the future isn't just in crypto, it's in a new, tokenized reality. But this isn't just a one-off project. It's a self-sustaining cycle of growth, and it's what truly sets HBAR apart. You see, all these pieces, the governance, the technology, the tokenomics, and the adoption, aren't just separate features. They're all part of a single, reinforcing machine. This is the Hedera Enterprise Flywheel, and it's a force of nature. Here's how it works. 1. The Hedera Governing Council of Global Corporations provides trust and regulatory clarity. 2. That trust attracts more enterprises to build real-world applications on the network. 3. These applications generate a massive number of transactions, creating a huge spike in network volume. 4. That volume drives the token burn mechanism and increases the demand for HBAR to pay for services. And as volume and demand grow, so does the price. This isn't a speculative pump, it's a compounding loop. It's not about hype, it's about network effects. And once a flywheel like this gets going, it becomes nearly impossible to stop. But there's one final crucial piece of this puzzle that almost no one is talking about. It's the silent convergence of all these forces that's about to make HBAR a household name. We've talked about the hidden volume, the perfect tokenomics, the quantum-proof technology, the governance moat, and the tokenization revolution. Now, let's talk about what happens when all of these forces converge. This is the moment where Hedera stops being a quiet, boring crypto and becomes the foundation for a new digital economy. The silent accumulation by institutions turns into a roar as the demand for HBAR to power their applications skyrockets. The methodical token burn starts accelerating, creating a true supply shock. The regulatory clarity provided by the Governing Council opens the floodgates to trillions in institutional capital that was once on the sidelines. This isn't just a bull run, it's a fundamental re-rating of value. It's the moment when the market stops seeing HBAR as just another crypto and starts seeing it for what it truly is, a mission-critical piece of global infrastructure. By this point, the Hedera news headlines won't be about price predictions. They'll be about how governments and financial giants are building on the network, and the price will simply follow the utility. So what does all of this mean for you? It means you have a choice. You can be part of the 99% who watch from the sidelines, chasing the next meme coin pump, or you can be part of the 1% who position themselves early, based on logic, data, and an understanding of the future. The charts are not lying. The multi-year consolidation pattern we've been in is a coiled spring. And every single piece of data we've gone over, the hidden volume, the token burns, the enterprise adoption, is tightening that spring. When this thing breaks out, it won't be a gradual climb. It will be a violent, explosive move that will rewrite your financial future. That $1 price target is just the first stop. The real endgame is a price that seems unbelievable now but will be a simple reflection of the network's utility. A Hedera-powered world of tokenized trillions means a price per HBAR that will make you a legend. We're talking about a move that could take your portfolio and add a zero to it. The silent accumulation is almost over. The infrastructure is almost complete. The flywheel is now in motion. This is the culmination of years of work, building, and waiting. And you are here, right at the moment of truth. You chose to do the research, and now you have the receipts. The next move is yours to make. Look, you don't need another hype video. You don't need another influencer telling you to buy a random coin. You needed the facts, the data, and the confidence to hold through the doubt. And you have it now. Your journey of discovery doesn't end here. The transformation from a stressed-out spectator to a confident insider requires a continuous commitment to knowledge. You've seen the why, now it's time to see the what next. I've prepared a follow-up video for you that takes everything we've talked about and breaks it down into a practical guide. Click the video you see on your screen right now. Don't wait. Don't be late. I'll see you there.